What if I told you that while most tech stocks have been taking a beating this year, there are a couple of Wall Street favorites quietly setting up for a potential rebound? Today, we're breaking down two trending tech names that have analysts buzzing, stocks that have dipped hard lately, but could be primed by the dip candidates as their growth engines rev back up. Whether you're a cautious investor looking for quality on sale, or a bold trader hunting for the next breakout, these two companies might be worth a closer look. We'll cover exactly what's been dragging them down, what catalysts could send them higher, and how the pros are positioning their bets. So grab your coffee, hit that like button, and make sure you're subscribed, because you won't want to miss this dive into two of the hottest trending tech stocks on Wall Street right now. Let's get into it. Marvell Technology, MRVL. First up is Marvell Technology, trading under the ticker MRVL, currently priced around $74 per share. Over the past year, Marvell is only down about 4%, but year-to-date it has fallen 32% from its 52-week highs of $127. Marvell is a leader in creating high-performance semiconductor chips that power critical data infrastructure for data centers, AI, 5G networks, automotive systems, and enterprise networking. Their custom silicon processors are widely used in cloud computing workloads, supporting hyperscalers like Amazon, and they also have exposure to in-vehicle networking and autonomous driving systems. However, Marvell has faced some headwinds recently, including concerns over tariff pressures and lower margins related to their ASIC product mix. Much of this revolves around their dependency on a few large customers, which can create risk. Even so, demand for AI networking solutions remains very strong, and the ramp-up of new products is starting to show serious momentum. Marvell's data center segment, in particular, has shown remarkable growth, with revenue surging 78% year-over-year, while its latest quarterly report showed record revenue of nearly $1.9 billion, up 63% from last year, alongside $340 million in stock buybacks. Recently, Marvell hosted a custom AI investor event where they announced new hyperscaler solutions, advanced memory, and power innovations. This event has boosted confidence among Wall Street analysts. For instance, a 5-star analyst at Bank of America reiterated a buy rating and increased their price target, pointing to Marvell's strong pipeline in custom compute segments and an expanding customer base. Altogether, Marvell has 31 current analyst ratings with 27 buys and 4 holds, making it a consensus strong buy. The average price target suggests a 21% upside from current levels, with some analysts even projecting up to 74% upside. GitLab, ticker symbol GTLB. Next, let's talk about GitLab, trading under the ticker GTLB and priced around $41.85. Over the past year, GitLab is down just about 2.4%, but year-to-date the stock has slid roughly 25% from its February highs of $74. GitLab offers a unified DevOps platform that helps organizations plan, build, secure, and deploy software faster and more efficiently, providing critical control and visibility across the entire DevOps lifecycle. In its most recent quarterly report, GitLab did post a revenue beat with 27% year-over-year growth to $215 million, but this was their smallest beat to date, and for the first time, they did not raise future guidance. Management flagged slower growth among smaller and mid-sized customers and said the macroeconomic environment remains cautious, impacting deal timing. Still, GitLab highlighted strong cash flow performance, generating $14 million in free cash flow with a record 49% adjusted free cash flow margin. One notable buyer of GitLab's dip is ARK Invest Cathie Wood, who added over 227,000 shares last week, showing confidence in GitLab's long-term vision. Following earnings, many Wall Street analysts reiterated buy ratings while trimming their price targets, citing cautious guidance, but also recognizing strong remaining performance obligations and a best-in-class DevOps platform that can coexist with growing AI coding tools. Right now, GitLab holds 24 analyst ratings with 20 buys and 4 holds, coming in as a strong buy with an average price target near $63, implying about 50% upside from current levels. Even the more conservative price targets still see double-digit upside, with the highest estimates showing over 100% growth potential. So, there you have it, two trending tech stocks, Marvell and GitLab, that are drawing strong analyst attention despite their recent price declines. Wall Street seems confident that these companies have turnaround potential thanks to their critical roles in powering AI, cloud, and DevOps ecosystems. What do you think of these stocks? Are you considering picking up shares on these dips? Drop your thoughts in the comments below. I'd love to hear from you. Remember, these videos are never financial advice. Always do your own research before making any investment decisions. If you enjoyed this breakdown, don't forget to hit the like button and subscribe to the channel for more updates. Thanks for watching, and I'll see you next time.